What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking out for the future. I'm also going to do some in-depth technical analysis and actually break down some very important factors you have to consider when it comes to NIO. I'm also going to talk about this week because we have the FOMC meeting, we have the GDP report, we have the PCE report. I'm going to talk about how all of these things are kind of aligning together, how they're affecting NIO, and what you should look out for the upcoming week, because I do see even more downside for the markets and NIO as well. Now, I know you don't like to hear that, but once you see this video, everything will make lots of sense. And before I get started, I have to mention a couple of things real quick. I'm not a financial planner. Don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $3,500. And you could always sell these 6 free stocks for cash and use that cash to buy some NIO shares for free. This is a limited time offer. It ends in just 2 days. Check it out before they run out. With that out of the way, let's get on with the video. So at the time I'm recording this, NIO is down almost 7%. I am recording this about 30 minutes before the market closes. And so far, NIO has been just taking a big hit. Now, what do I think is going to happen going forward for the markets? And I do see a continuation of the downside. So if we look at SPY, you guys could see that the SPY did have this gap up here. I did talk about how that being filled was a possibility, but we ended up not filling it. We actually got a rejection off 400. We've been dropping since then, and it does look like we're going to see a continuation of this downside going forward. I wouldn't be surprised if the SPY actually fills the gap down here at 382 or even lower than that, because we have some big things to discuss. So we have on the 27th, I want to warn you right now so you guys are aware of this. Just to remind you, the 27th, we have the big day where Jerome Powell is going to announce the federal funds rate hike. And the rate hike is going to affect the commercial banks, their interest rates, and then they charge higher interest rates as a result of that. So the cost to borrow money in the USA and also for other countries around the world which are borrowing from America and so on and so forth, it goes up to slow down this economy, to drop demand, and kind of slow down inflation as a result. So what's happening is on the 26th, I think there's going to be a pre-recorded message from Jerome Powell. Then the 27th is going to be the big day. So keep that in your calendars. The 27th is going to be huge. Now, so far the markets, the stock market, they've priced in the 75 basis point hike. They haven't fully priced in the 100 basis point hike, but it does seem like we're most likely going to get that 75. And much of that change is kind of like priced in already. So it won't be as bad after that, in my opinion. I do think the market's going to improve after, but until the day comes, there is going to be a little bit of downside going forward. Now, right now, we know the Fed is most likely going to raise it by 75 basis points. So if they do that, the market could actually see some improvements after. But if they surprise us and actually raise it by 100 basis points, the market will most likely take a huge hit. Now, I know you don't like to hear that, but the truth is, if they do that, if we get 100 basis points, this would be better for the market for, I would say, a faster recovery, but it would be worse for the stock market, at least for the short term, just to put that out there. Now, we know it's most likely going to be a 75 basis point hike, but you should be prepared for anything. Now, historically, when we have these big dates like this, Mondays tend to be the worst days. That's the day the market tends to take a hit. Then by Tuesday and Wednesday, we tend to see some improvements, at least historically. So this is an indication that, I think some people have mentioned how the market kind of like reflects itself on Monday relative to Friday. So Friday, so far, the market's like pretty red, it's taking a big hit. We're probably going to see a continuation of this for Monday. I want to prepare you guys for that. So with that said, there's another big thing I want to prepare you guys for as well. That's the GDP report that's coming out. All right, and that's going to be released on the 28th of July. And the reason why this is going to be important is because when you have 2 consecutive negative GDP quarters, that means we're in a recession, at least from the dictionary definition. That's what's widely accepted from the markets. So with that said, the true confirmation that we're in a recession is going to come out, and we're about to find out the day after the FOMC meeting. With that said, it's going to be a big day. I don't think this is going to be that bad for the markets. I mean, if we find out we're in a recession, is it really that big of a deal? We already knew this. The market's been pricing this in for a long time. So I don't think this is going to be that bad for the markets, but it is something to just keep in your mind and consider. We also have the PCE report coming out. This is the CPI report for the Fed, and this is actually going to be excluding food and energy. So this is expected to be an improvement relative to before, in my opinion. So I really hope that we see somewhat of an improvement. But overall, right? Overall, it may not be that good for the markets for the long term if we do see something else that changes, because I don't want there to be this separation between PCE and CPI. I don't want PCE to start dropping really low while CPI is high and then the Fed says we did our job. I really don't think that's going to happen, but it is something to be prepared for too. So big dates are coming, specifically the 27th, 28th, and 29th of July are going to be huge dates for the markets. And as we approach those dates, I'm seeing improvements for Thursday and Friday, and maybe for part of Wednesday. But I really believe that Monday is going to be a pretty hard red day, and Tuesday may actually see a little bit more red, but it won't be as bad. But that's essentially what I'm seeing. With that said, the SPY is probably going to start tanking, in my opinion. I wouldn't be surprised if we actually fill the gap down here at 382 relatively soon. Once again, it could happen within maybe a day or two. Really could happen, as hard as that may sound for a lot of people. And with the SPY tanking like this, right, there are additional factors that would actually push NIO down too. So I drew out this downtrend for you. I was talking about how I did see NIO respecting this, and I've been talking about this gap down here. People did not like to hear that. I understand it's very frustrating, and we ended up filling the gap just as I had predicted. And we've been testing $19 so far. It has been holding us. I don't think that's going to hold for Monday. I think we might actually drop it to the 18s very, very soon. Now, another thing that's kind of driving NIO down is a lot of the things going on in the real estate sector for China. It's having a very negative effect for the people. And what we're essentially seeing is the fact that in China, we had these massive developers. They are defaulting on their debt, and there's a crisis right now that's going on, and the banks are getting involved, and it's just leading to a massive mess with protests and etc. So with that said, I mean, this is very kind of like similar to what we saw back in 2008 in the USA, and this housing crisis that we're seeing in China with all these big developers defaulting on their debt, that is also having a negative effect on many Chinese companies, such as NIO as well. So that may have played somewhat of a role in NIO kind of dropping the way it is. But the bigger thing would be the technical aspect of it and the overall market that will play just as big of a role. From a technical standpoint, let me just show you what some indicators are showing. Let's just start off with the EMAs, and let me actually hide my drawings just to make this a little bit more clear. So let me see on the daily, what are we essentially seeing? Check this out, guys. So we got a 1348 EMA crossover right over here. We started approaching the 200 EMA. We actually were not able to break past it, which is, excuse me, an indication that we're still on this downtrend, right? And what happened was, right now, after we got this buy signal from the 1348 EMA on the daily, we're starting to curl again like this. All right, we're starting to curl. And it looks like we're getting close to another crossover. We're getting pretty close to it. If this thing continues to tank, we might get another 1348 EMA crossover, and NIO could actually drop a couple of dollars down. I wouldn't be surprised if we see this thing in the 18, 17 range very soon. But right now, I'm just going to stick with 18. I do think NIO is going to trade in the 18s pretty soon. And it's looking kind of bearish from this technical standpoint alone. We could also look at what the Bollinger Bands are telling us. You guys could notice we got this nice push up from this move right here. Bollinger Bands got a little tight right here. We got a nice push up. After that, we're trading kind of between the basis band and the lower band, and we ended up like touching the lower band, which is another bearish indication. The volume isn't that great either. We saw a decrease in volume, a bit of an increase in volume today, but over the last few days it's just been pretty dry. Once again, another bearish indicator. As far as RSI goes and the MACD, right? RSI is dropping with the overall trend, nothing new there. And the MACD on the daily, we got this crossover from the MACD and the signal line showing lots of bearish momentum. It's still continuing as of right now. We're not seeing a big kind of like reversal in this downtrend. It's kind of continuing. So From a technical standpoint, it's looking kind of bearish based off the news and everything else. It looks bearish. That's just for NIO, but it's not necessarily NIO's fault. Okay, it's the overall market. It's not. This isn't like dropping on fundamentals. It's not like NIO did anything fundamentally wrong. It's just what happens in the stock market, right? This happens to Tesla. It happens to Apple. It'll happen to every company out there. I mean, I could even pull up other great companies out there like I don't know. I could pull up like CPE or even BBIG or something else, and you'll see very similar price action. I mean, we can't just attack NIO for this. I know a lot of FUD tends to spread during times like these. Just don't worry about the FUD. Just remain calm, cool, and collected. Be very patient. Be humble. This is just a short-term thing, and I want to warn you about all these big dates just for today. With that said and done, please be prepared for this week. Expect very crazy price action. And when we see the market kind of tank, you could actually look at the UVXY, which is the Ultra VIX, or even just the VIX itself. It has a tendency of being inversely correlated with the market. So what I'm essentially seeing is if the market does take a bit of a hit, we could actually see some bullish moves from the VIX. Obviously, it tends to be inversely correlated very soon. And we might see some nice moves and an increase in the volatility index. So that is something you should look out for. I mean, there are some call opportunities coming right here, in my opinion. That's essentially what I'm seeing for the markets. As for NIO, like I said, still looks kind of bearish based off everything I talked about, but it may not last as long as some people are thinking. I'm not saying this is going to last like forever. We could get a reversal as soon as the end of next week or even the week after. So just be patient, be ready for a potential drop for Monday, and I'll see you guys in the next one. NIO to the moon, because in the long term, the future is very bright, and peace out.